The essence of IAS 38 Intangible Assets. An intangible asset is an identifiable non-monetary asset without physical substance. The asset must be controlled by the entity as a result of events in the past, and something from which the entity expects future economic benefits to flow. We must have a close look at the definition. It says the asset should be identifiable. Identifiable means either separable or arising from contractual or legal rights. Well, separable means capable of being separated or divided from the entity and sold or transferred or licensed or exchanged or rented, either individually or with a related contract or identifiable asset or liability. Further, it should be a non-monetary asset. Well, what are monetary assets? Monetary assets means money held or assets to be received in fixed or determinable amounts of money. The examples of non-monetary assets include property, plant and equipment, and of course, intangible assets. Coming to recognition criteria, there are two criteria which are the same as under IAS 16 and IAS 40. The first, it is probable that future economic benefits that are attributable to the asset will flow to the entity, and second, the cost can be measured reliably. Of course, both of the criteria should be met for recognition. Initial measurement. In case of a separate acquisition, for example, in case of a purchase of a license, it is measured at cost, that is purchase price. If it is acquired as part of a business combination, it is measured at fair value as per IFRS 3. If it is internally generated goodwill, it is not recognized. If it is internally generated intangible asset, that is to say development expenditure, then it can be recognized when PI criteria are met. The amount of capitalization is the expense from the date development expenditure starts. If it is acquired by a government grant, then the asset and grant is measured at fair value or nominal amount plus expenditure directly attributable to preparation for use. Internally generated intangible assets. Research and development. Well, during the research phase, all expenditure is recognized as an expense. It cannot be capitalized no matter what. Research expenditure is always expensed. However, the development expenditure meeting the PI criteria must be capitalized. The PI criteria. The P stands for probable future economic benefits. I stands for intention to complete and use or sell the asset. R stands for resources, that is, the resources should be adequate and available to complete and use or sell the asset. A stands for ability to use or sell the asset. T for technical feasibility for completing the asset for use or sell. And E for expenditure, that is, expenditure can be reliably measured. Expenditure that does not meet all these 6 criteria are treated as expense. Note that the costs allocated to intangible assets should be only costs that can be directly attributed or allocated on a reasonable and consistent basis to creating, producing, or preparing the asset for its intended use. The cost of an internally generated intangible asset is the sum of expenditure incurred from date when the intangible asset first meets the recognition criteria. IAS 38 strictly prohibits the capitalization of expenditure on internally generated brands, mastheads, publishing titles, customer lists, and items similar in substance. Similarly, the startup, advertising costs, training costs, promotional, relocation, and reorganization costs are expensed rather than capitalized. Subsequent measurement. Either of the two models can be chosen. The cost model, under which cost less accumulated amortization less impairment losses. Under evaluation model, fair value less subsequent accumulated amortization less impairment losses. If the revaluation model is used, the fair value must be able to be measured reliably with respect to an active market. The entire class of the intangible assets of that type must be revalued at the same time. If an intangible asset in the class of revalued intangible assets cannot be revalued because there is no active market for the asset should be carried at its cost less any accumulated amortization and impairment losses. The revaluations should be made with such regularity that the carrying amount does not differ from that which would be determined using the fair value at the year end. Well, there is not usually an active market for an intangible asset. Therefore, revaluation model is usually not available. But the fair value is obtainable for assets like fishing rights, quotas, taxi cab licenses, etc. Amortization. An intangible asset with a finite useful life should be amortized over its expected useful life. The depreciable amount should be allocated on a systematic basis over the useful life. The amortization begins when the asset is available for use. The useful life and amortization method must be reviewed at least each financial year end and adjusted if necessary. Please note that intangible assets with indefinite useful life should not be amortized. Such an asset is tested for impairment at least annually. Disclosure. There are extensive disclosure requirements under IAS 38. They include a reconciliation of the carrying amount of intangible assets at the beginning and end of the reporting period, the amortization method used for assets with finite useful life, the amount of research and development recognized as an expense, and a description of areas of judgment such as the reasons supporting the assessments of indefinite useful life.